CNBC TV 18, celebrating 70 years of business leadership.
Welcome back to our special analysis of the monetary policy just announced. The first one, a crucial one, after the demonetization move announced by the Government of India on November 8th. I've been speaking to a bunch of senior bankers and bond market veterans. As you can see, Neeraj Gambhir, Ashish Padsati, Anant Narayan are still with us. Anant, what did you take away in terms of, what we should expect from the Reserve Bank in terms of monetary policy action next year in the first 3 months?
Well, Lata, look, the domestic impulses for lower rates will still remain. We think, given what we're going through on demonetization, which can impact us in the short term, inflation should be about 4.5% for this fiscal, should continue in that same trajectory for the next year as well. Growth, we tend to agree with what the RBI has put out. In fact, there's a risk that it slips below 7%. So all those impulses for lower rates will remain as far as the domestic context is concerned. However, I would caution on the global front. The reality is all the uncertainty that we saw listed out today in the policy on the global front will remain. We don't know whether it's going to be the Trump reflation trade continuing with the higher interest rates in the US. Or is it going to be more populism and therefore less trade, less global growth with all the vulnerabilities we have in Chinese banks and in European banks? There's also the added complication of OPEC and commodity prices. So there are plenty of uncertainties on the global front which do warrant for caution and for watching the financial stability front. So I would put a bit of caution around on expectations around further interest rate cuts. Yes, domestic impulses in the short run will remain, but probably the reasons for rate cuts and lower interest rates, given the global context, are fast receding.
Okay. Thank you very much, Anand, for that counterpoint. There is a chorus that a rate cut expectation. One more rate cut is possible, but those are the key takeaways from my eminent panel of experts, that growth has probably been overestimated by the Reserve Bank, that inflation perhaps also has been overestimated and may come in lower. A bulk of the experts do think that there is scope for one more rate cut. Not much scope for fiscal largesse at the moment. Very, very difficult to guess whether the government will be able to give a fiscal boost in the next budget that's due on February 1st. Gentlemen, thank you very much for analyzing the monetary policy and the impact on banks and the economy for us. Like many of our experts, I would think that the Reserve Bank has come out with flying colors as far as its credibility is concerned by sticking to what was its given mandate to chase inflation down and also not giving away too much by way of any large dividend to the government. Let me leave you with some of the thoughts we got from the country's biggest banker, Arundhati Bhattacharya, the chairman of State Bank of India.
RBI monetary policy, it was a bit of a non-event. I think most of us had thought that 25 basis points was given, and many of us, including me, we were rooting for an even higher number. So the fact that there was no change was definitely a little bit of a disappointment. But I suppose, what was on their minds could probably have been 2 or 3 things. The governor talked about inflation. So probably what he could have in mind is the fact that oil prices look to be going up. Secondly, certain commodity prices have also stabilized. Though frankly, if you look at the numbers and internally what we have looked at it, it does not appear that inflation is showing any upward kind of a bias. Secondly, probably he may have had the exchange rate in mind, given the fact that a Fed rate hike is almost certain, though he did say that the Fed rate hike has already been factored in. But that could have played somewhat, had some weightage when this decision was taken by the MPC.
CNBC TV 18, celebrating 17 years of business leadership.